must be some kind of way out of here, said the would-be speaker to the House. I don't seem to have the votes. I thought I had more clout. All along the Watchtower, Matt, on a beautiful, beautiful January 4th, and Kevin McCarthy blowing in the wind, trying to become speaker. Matt, I thought it was interesting that the World Economic Forum on their website, already has him as the current speaker, and he's already in the office. I thought that was interesting too. Yet he doesn't have the votes, and the outrage. I find it hilarious. The outrage of all of this.
Yeah.
And if you go by the Twitter polls, I think Jim Jordan should be the guy.
Well, my Twitter polls say Heffernan.
Put me in. Put me in, Coach. I'm ready to play. I'm ready to play today. It's interesting. Harbaugh for speaker. A Michigan man. He's a Michigan man. He's a Michigan man.
He's leaving. He's leaving every year. Ohio State starts the narrative story. He's leaving. Where's Ryan Day? He's leaving.
Hey, Matt, no. You know what I said? I said that
Michigan's kind of like the Republican, the lame Republicans. They don't even know they're being played.
Right. Exactly.
Every year.
Matt, I thought that we try to stay on tack this year because there's so much ridiculous negativity out there that we're going to be the light. We are going to be the light. And I saw this.
I am the light.
I saw this and I thought about this because we've talked a lot about, and this is from a Sahil Bloom. Feeling stuck, go for a walk. You talk about this all the time, but I love the graphic, right?
Yeah.
Ideas in a meeting or at the trade desk or when you are in a cold streak is just, your ideas are a drip. Go for a walk, right? And we got the beautiful Deschutes River here. Love spending time walking the river, and it clears the mind. It gets you ready. It gets you ready to re-energize and able to engage with a clear head. Very important for trading. Very important.
Very important.
Thought I'd share that right off the bat. Now let's get to the rest of the. How about the enlightened? How about this, Matt? Ayn Rand did not live recently, correct?
I think she died in 50s, 60s, maybe. Yeah.
All right. So inflation is not caused by the actions of private citizens, but by the government, by an artificial expansion of the money supply required to support deficit spending. No private embezzlers or bank robbers in history have ever plundered people's savings on a scale comparable to the plunder perpetuated by the fiscal policies of a statist government. And I got to tell you, I think that's the big part of the divide right now, because McCarthy he's part of the swamp. I don't care what you tell me. The guy is, when you're on the World Economic Forum website, I got a problem right away with you caring more about me and my problems versus an agenda, and the whole thing gets more comical every time you see Klaus Schwab and talk. Remember, we have ways to make
$1 billion. I mean, that's all you think about every time, right? It's just
right. We have ways to make you talk, old man.
By
Sciencey papers.
By the way, yesterday I had a deep cleaning on my teeth, and I was thinking, man, this is just like I've had a half a cavity in my life, and that was just recently in the last 6 months in my long illustrious life. And the teeth cleaning, I have sensitive teeth, not when I eat or whistle or do anything like that, but cleaning of my teeth drives me bananas. So I had a deep 2-hour cleaning yesterday, and all I could think was, wow, Joseph Mengele just destroyed people in this condition. Right? Just destroyed them. I was weak to my knees. I was like, fine, I'll take the shot.
Right, exactly. Just start. What was the other one? Marathon Man, right? With Dustin Hoffman. Dustin Hoffman.
Yep.
Wow. Trouble. Elon Musk sharing with us, Matt, a Venn diagram. where all these things converge. You are here in the middle of these great works of literature. 1984, and by the way, they're all fiction, and they all seem to be true now, living through them right now. Hold on one second.
Yeah, we are.
Matt, take it away for a second.
Well, this is your thread, but yeah, you've got your Venn diagram of you are here. We've got Brave New World 84 and Fahrenheit 451. I would ask how many of today's woke 20 to 30-year-olds have read these books, Bob? That would be my question. Because, now since you don't even need a SAT score to get into college and everybody gets an A now, this whole college, this equality that they're pushing, this wokeness and the lack of, the meritocracy going away is what is going to kill this country. It is what is going to kill. What made the U.S. great was we were anti-tribalism, and now we're going back.
Well, not only that, for sure. I'm not sure we let tribes flourish, and we thought that competition amongst tribes was the healthiest way.
Correct.
Fair. Believe me, because we fought this fight a long time ago. Where is the fight for the common man? Like the what is it called when you have a monopoly? I mean, there was tons of legislation to fight monopoly power, right? And this Venn diagram it's crazy to me. Like Fahrenheit 451, if you don't know, is the temperature from which or at which paper burns. So you burn the books, like you burn the dissent. You don't let people to read the dissent. If you can't tell me that that's not what we're living in right now, you're lying straight to my face. That's all I got to say about that.
Right.
All right, Matt. Let's talk inflation.
But it's interesting. Maybe Elon showing these Venn diagrams will encourage. I guess my point being, will encourage some of these woke 20 to 50-year-olds to read these books and understand maybe a little bit about why we make fun of the World Economic Forum, why we make fun of Klaus Schwab, because it's closer to reality than it is, these books written 60, 70 years ago, coming back to you again.
100%. All right, now we're gonna let's talk prices. I'm gonna go first here. Let me share this, and then if you let me share, once again, unable to share. It's a daily trouble here at Market Vitals. I don't know if we need to give Lee more power or what we need to do. Matt, this is from Car Dealership Guy. I love Club Pro Guy myself. He's great, a great follow on Twitter. But this Car Dealership Guy, he says the market is literally flooded with Buicks. They're rotting on car lots like trash. You can score a deal on one of these if you're willing to suffer the embarrassment of being in one, of being seen in. It's the old moped joke. Matt, let's go to prices.
But my question is Tiger Woods still the spokesperson for Buick?
He lived through a Buick crash. He did he not? Was he in a Buick when he crashed?
No, that was like some it wasn't. What was that car?
It was a good car for crashes. That's for sure.
It was an off-brand, but I don't remember what it was.
All right, Mel, we're going to talk cars, and then let me just point out this tweet right below me from Silky. Mortgage rates at 7%, a monthly payment of $2,500 buys you a $375,000 house. Last year, that same payment bought you a $600,000 house. Let that sink in, Matt. We talked about this over a year ago when rates went from 3 to 4%, right? And so it's staggering now. What the price affordability equation completely upside down. All right, Matt. I know you had a nice little trade in Tesla. Let's go to Tesla and then to GM.
Well, again, yesterday as we were pushing down there to 104, which was a pre-market low that we saw last week, by the way. So that wasn't just a random number. So that, again, we traded down here 105.78, and it was actually 104's pre-market.
I don't see it. Do you see it? Did you bring it up? Did you think you bring it up? Because I don't see it.
Hang on one second. I guess I didn't. I had to shut off your share first because you're oversharing.
He's on timeout. Put him on timeout for oversharing.
But here's Tesla. I mean, listen, it's up $4 today, 4%. It got up a little bit further, got up to about 114. Again, I think that
that is a one broken ass profile.
But I do think, Bob, that we're gonna dip. Probably, maybe we don't yet. But I thought we'd get below 100 sometime this month. Yesterday was looking like it could have been the day. But again, we came off of that and are bouncing a little bit. But again, these guys aren't, they sell nowhere near the number of cars that Honda. Let's look at Honda does, or GM. They sell nowhere near the total volume, and yet they have this. Let's see. Let me give you Toyota first. Toyota again up here at 138, and they've said no, we will not go all electric. Right? This is the one company that has come out and flat out said we will not go all electric. But that's kind of like Jim Harbaugh saying I will not go to the NFL and then he wins things every year. So who knows what to believe?
Listen, we are all incredibly.
By the way, McCarthy just lost his 4th attempt, so I guess you could
hang it up. He's an Irishman, Matt, and I know Irishmen, and they're fucking stubborn.
Yeah,
they're stubborn, and the ego can get so big. I mean, forget it. I wonder if he was a red-haired Irishman, because they are the worst. There's nothing worse than that.
I'm trying to bring up Honda because we haven't looked at that one in a while. Let's look at a couple more Japanese manufacturers. And again, the Japanese, interestingly enough, are doing some studies on, not to get off topic, but they actually are calling into question some of the jab stuff right now and saying we need to do some investigating on some of these deaths that we're seeing.
Well, they're for sure not Fahrenheit 451ing and just burning any paper that says, wait a second, I'm seeing something here.
Right. So Honda, again, has traded as low as, down here at 21 recently. It's trading 23.52. Again, paying 3.5%, 3.3 dividend, market cap 39 million. Again,
well, it's amazing too, though. Honda makes way more than cars.
Yeah, they make motorcycles.
I think they make everything.
All the little ATVs, all that shit, all that crap, right? Tons of stuff. Honda has a 1/10 of a market cap of Tesla today. I just want to point that out. 1/5. Today, Tesla went from 2 billion or 2 trillion down to 350 billion, and Honda is at 38 billion. So 1/10 the size Honda is. And again, we've already talked about, they're a huge company. Toyota today is 191 billion. So still half of what Tesla is, right? Just to give some.
It just seems as a relative value play. How would you not continue to short? And we've talked about these before.
Yeah. Ford down here at 48 billion again. 1/8, 1/9 of Tesla, and of course General Motors is at 48. So again, General Motors and Ford are the same size. The only two publicly traded American companies left. You can get your Buicks still from this company, General Motors, that my family, my father worked at for a long time. And we drove a lot of Pontiacs and not so many Buicks, because Buicks were nicer, right? They were like, it was kind of.
Yeah, for sure they were. For sure. I don't, which is why I didn't really understand the tweet, because, Buick. Well,
so the old Buick Oldsmobile, BMOC, they used to call it Buick Motors Oldsmobile Corp. It was called BMOC because my dad always talked all the lingo. I had the whole car lingo down because my dad was in the car biz, right? He worked for GM and then he worked for the suppliers that sold to the auto companies. So I know this business growing up around it, right? We all did in Detroit. Everybody's ingrained into the auto business and the suppliers, tier 1, 2, 3, blah, blah, blah. Huge businesses. And you can't tell me these people, what's so interesting is it's interesting. I had a problem with my car on my trip over the holiday. I took it in yesterday to my mechanic, and it was just a wiper issue. The right wiper stopped working. The left was working. And he was like, oh, it should be fine. I should be able to just tighten something. And I'm like, okay. So I take it into the guy, he tightens it. We're off to the races. It's working again. The right one's working. But what was interesting, while I was there, he took a call from a guy who, had a hybrid, right? It was a Kia hybrid, battery and gas powered.
Right.
And he was like, I will not touch that thing. I will not work on that because I will be electrocuted and I don't know what the hell I'm doing. And that's what he said. He's like, and then so he was trying to call for the customer who would work on this car in Central Oregon. And I don't know where he got, he made a couple calls while I was there, but it's interesting because it's not easy to work on these things, right? You have,
and let's face it, when I saw a great tweet the other day about a rancher and a hammer, and he's like, yeah, this hammer is going into the garbage can, and you're like looking at it and you're like, well, why? He's like, I was working on electric fences, this hammer goes in the, and it had a wood handle. He thought it was, he wouldn't get shocked using it, working on the electric fence, but there was a thin metal, spine that the wood was wrapped on, conductive. And I can't imagine that isn't in a mechanic's back of his mind. Like,
yeah,
Sparky is no fun. Is no fun.
Really?
That second tweet that I showed you was a cost or affordability of housing. Why don't we look a little bit at rates, because the bonds have been the 30 years been trying to claw back a little bit, but then any housing du jour that you want to go through as we start the year. Your choice.
My housing choice? Well, we haven't looked at it in a while. Let's look at Toll Brothers. Again, no pain yet in housing. I talked to realtors in this town, and it's slow for sure. People that have been in this business for a long time, like, we're in this slow period. Toll Brothers has been in a slow period. Really, we've been in a bracket, and I think you can see that pretty easily here, Bob. But we've been in a bracket basically, from mid 50s back here in the first of the year down to the lows right below 40. So, Toll Brothers is kind of a higher end mass builder of homes, right? They're selling $1 million specs all over the country in the nice neighborhoods in Detroit and Chicago, wherever. Like, they're all over. They go out and buy land. So it's a pretty good indication of money. And it's been bouncing. I mean, it's been up 25% here since we bottomed here in mid-October. So that's had a nice run. And I think this is kind of what you're seeing in all of them. Housing is not rolling over, even with the higher interest rates.
Yet.
So I don't know what's
is that, no, they had earnings back there. What was it? Did they have earnings coming up? I thought I saw that on the bottom of the chart.
Yeah, they got, looks like dividend on the 5th, which is tomorrow, getting paid. And then I can't see when the date is. They're like right on top of each other, but it's got to be coming up here probably at the end of the month when the earnings start for everything, right? So earnings are coming up. Again, I think the earnings aren't going to be good on these companies for sure, because even if nothing's happening, that means they're not selling anything.
Well, so, they are.
I mean, I talked to a realtor that lives in SLO, on the Central California coast. A lot of people are leaving again, Bay Area. A lot of people are leaving SoCal like they are to come here, or Utah, or
I think
Colorado, and
right,
Central
exactly.
California coast. If you want to stay in California, is a good option for people, right? People go to St. Louis Obispo, SLO, Pismo Beach, all those areas, and right in there. It's not far from the Bay. It's not too far from the SoCal. So I talked to her, and she's like, yeah, we haven't, it's a new development. So she's working for a builder selling this stuff, and they have wait lists. But it's, again, very niche, right? So niches are always going to do well. And I think Toll Brothers is one of those niches, right? Because it's higher end spec homes. So it's people that have the money. And, just thinking about some of the headlines you saw today, Salesforce announced they're going to be cutting thousands of people. If they have 75,000 employees, which is what they have. I mean, I was looking at that before we came on. It looks like they have about 75,000 employees. They cut 10%. That's 8,000 people. At some point, those are the buyers that are buying these Toll Brothers homes, right? Those are the ones that are buying them. So whether it's Twitter, whether it's Salesforce, whether it's Facebook, Google, Microsoft, yada, 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 Apple, right? Those are the people buying these homes. And if they're not buying them, who's buying?
Who is buying them? Great question. All right,
So-
Matt, let's take a look at the bonds. I want to look at two things, bonds and the dollar, and because I think those two are going to be and I saw Longplex tweet about the dollar, and his stuff is looking.
Well, I mean,
he
I've been
talks
looking
about bottom hunting, right, on this pullback. So
yeah, and he talks.
because it's a big story.
He talks about markets the way I do. At some point, you know, a 5-minute chart, a 15-minute, a 60-minute, a 90-minute are all coming together along with the daily, right? And that's what he talks about. That's what he's talking about, and I talk about that all the time. And at some level, and I think we're getting close to that on the dollar, we're probably getting near exhaustion. I don't think we're going to go below 100. We talked about this before. And really the levels that we talked about before, 102.84, we're holding there. We've been holding here, you know, really since, you know, again, we broke through here in early December. We haven't, like the market, nothing's going anywhere, up or down.
I couldn't agree more. I mean, this shit is dead flat, no new prices.
We have jobs number, we have the
weeks.
jobs number coming Friday, so I think everything's paused. This is a short week. It still feels like holiday trading. As I said, for me, really holiday trading after Thanksgiving does not end until January 15th. And really, it doesn't end until President's weekend is over. So, or Martin Luther King, whatever that, you know,
The January holiday, yeah.
the
MLK,
January holiday.
yeah.
Yeah.
MLK.
So I don't know. You look at the dollar here again. This is a significant sell-off, and it's not new. This has been going on for some time, since September. So this is a 4-month sell-off. At some point here, I think you're gonna, you know, and if you look at the daily charts on the dollar, really doesn't look. I mean, it looks bad, but it doesn't look. This level is right where we, you know, right where we are, which was an old high, 104. That's why we're battling around here. And again,
we call that an argument. There's an argument going on.
There's an argument. And again, this level down here needs to hold, you know, really down here at 100, which is the top of value. So we haven't even come back to value. So you've worked off some overbought over the last 4 months, shaking out the weak hands who chased from here to here and didn't take their profits. Now they're taking losses. Well, once you get them out, you'll probably find some more buyers soon.
Right on.
And with, you know, and with the way, again, I'm not saying I don't know if we're going to go to this, you know, 120 level that we talked about before, Bob. There's going to have to be some changes in the environment for that to happen. I don't know if we will see them. Who knows? I mean, that's why we come here every day, to see how the story evolves. But right now it's just kind of stuck. The story is stuck, whether it's SPOOs, whether it's NASDAQ, whether it's the dollar, whether it's the bonds. So for me, we're just kind of, you know, don't get too overly excited, bullish or bearish right now, because I don't see the story on either side of the aisle, quite honestly.
You know what? And that's incredibly important. Like, trade the market that's in front of you. Right now, this market is directionless.
Yeah, and the bonds have had a huge rally off of, you know, the end of the year. So here we basically closed on the lows for, I don't know if those were, I think we were a little bit lower. Yeah. So we were lower, you know, much lower, but we pulled back into value here. This is just the ZB, the T-bond futures. And again, we came back to 124, which again, this area should hold in here. 123, maybe test one more. This is one more run higher, but interest rates, I just don't see them. I don't see them going down.
No.
So all these little rallies that come up into here, I think you should be a seller of, and probably going to see higher interest rates still this year. I could see us going to, you know, 8, and we haven't looked at the 10-year in a while, but if you look at that 10-year, let's see if I can bring it up. You know, the 10-year got as high as, I think, 4 or 5 or so. Not quite. 4.35. So 4.4. Again, this chart doesn't look particularly bearish to me. It's just pulling back.
Yeah, it sure doesn't.
So this is a very bullish chart, and it pulled back to this old high. Again, shook through a little bit, but now is, you know, bounced up, now pulled back a little bit. So to me, if you think interest rates are going higher, the bonds as they go higher should be sold, and they'll go lower, right? That's the way it works. That's kind of how I see it.
That's how he sees it, folks. Man, I bought a new monitor, and it is giant. In fact, I want to share something from it, though. Let's see how it looks. And I want to talk about this. And this is, and I've talked about it before, share. You can see this, yes?
Now we can.
D's 23, D's 24. Again, this is the market's anticipation of what the short-term interest rate will be between 23 and 24. And I thought this was ridiculous out at 137, right? That they'd be easing rates by almost 1.5 points between 23 and 24. Like, how do anybody even have that metric? Like I can't tell you it's like the weather, man. It's like a climatologist telling me how fast the weather is going to climately change. But anyway, I do like this trade because it does trend, and it's showing a gap here, but it traded overnight cleanly. And I was in favor of being long D's, long D's 23, short D's 24, having this become less negative. But right now, I'm a little bit less of that opinion. I think we could easily go out and test this double bottom that they put in here back in early December at 140. And you really see here on the 4-hour how well this thing trends. Again, euro dollars, we're talking $25 a tick. And this thing is just, it trends very nicely. And I just wanted to point it out for all you curve traders. Start paying attention to some of these yield curve in the euro dollar complex. By far the biggest tradable contracts at the CME was the euro dollar curve contracts, euro dollar spreads, and I'm sure that is the same case today. Big money, big deep liquid markets that are tradable. And for forever or for a long time, these things didn't move. Like we had, as interest rates went to zero, there just wasn't a lot of play. Right. I just think that quadrant in particular is going to benefit as the uncertainty looms out years, if not maybe the rest of the decade.
Speaking of space,
we're not going to Mars. Nobody's going.
Just to give a little update, Virgin Galactic. I think the last time we talked about it was down here at $7. Got down into the twos, right into the twos there. Might be a good time to get long space. I don't know.
I'll get long space when you get long a cannabis stock. How about that? We'll see who does better. We'll see who does better. We'll race to the highs in either Virgin Galactic or Canopy Growth. Sure we will. All right, Matt, that's all I got. That is all I got. Anything else?
No, we got NFL this weekend. Aaron Rodgers can ruin everybody's.
Come on, let's give it a little thought on a Lions playoff berth.
Well, but they need they also need
what? Seattle to lose?
Seattle to lose against the hapless Rams who have already benched most of their team. So I just don't see it happening. That loss to Carolina ruined their season. So, and I don't see Aaron Rodgers losing anyways. I think he's got this. They're going to make them. If they win, they're in the playoffs. Why would he lose?
Right. You got to bet the jockey, I guess, huh?
In this case, yes, you do. I really do.
Jockey.
Yep. Hey, speaking of spelunking, do you ever follow this stock Splunk?
No.
Yeah.
No. Share. We haven't
brought it up. I just it was a good short from the 2020 days. I don't even know what they do. It's got to be a technology package software. There you go. 226 was the high back in the summer of 20. Now dipped all the way back. Took out the COVID low, by the way. Did take out the COVID low. I like to point these out because we talked this theme, and eventually junk does trade to new lows, and this did. So it traded to 65, which is 30% off the original COVID low. So if you don't think this stuff can happen to your Apples and your Googles, it can, and it probably will. So, and until that happens, the quicker we got to those prices, the quicker we might be able to see a bottom. But we're not even in a recession yet. Well, I guess one of the Fed heads yesterday said we are in a recession. So,
It's Fahrenheit 451.
it's just
With all thoughts,
back and forth, back and
all counter arguments can be written, left at the door, and then we will Fahrenheit 451 them.
But if you got
That's the brave new world that we're in.
that is the brave new world.
All right, man. All right, listen, that's what we got. Please visit us at marketvitals.io. Please share, retweet, right? Plagiarize. We're calling for plagiarism here, Matt. Our class calls for plagiarism.
Yeah, I've got to ask you, have you watched Yellowstone? I have not watched any of the 5 seasons, and now they got the prequels, 2 of them. Have you watched any of this stuff?
Yeah, I have. And for me,
You don't like it?
It's just it's so unrealistic. It's beyond belief.
Gotcha.
Honest to God, if they would have just set this in the 1800s, it'd be way more believable.
But that's why they're going back and doing those, right?
Yeah, but they didn't do that to begin with.
Gotcha.
Right? It was like Sopranos meets Deadwood in 2020.
Yeah.
Like, please, this shit ain't going on in today's age. I guarantee you it was going on in the 1800s.
Right.
Like, people were killing everybody. It was the Wild West for a reason.
Yeah.
They called it the Wild West for a reason.
Right.
It's just so, and some of the characters are just such awful human beings. It's like, it's
Right.
Unbelievable. It's like this is where we're at now. These are our heroes. These completely decrepit human beings. That's what we got. Oh, I love it. I just love it. Okay. Hard no for me. That's all. That's all I got to say. That's all I got to say about that. All right, Matt. Please go to Amazon.com and buy yourself some Shrimp Mojo and do yourself a favor, cook someone a meal. Matt, there was a great, let me find it. Let me find it and share it, because I thought it was a fantastic share by Manja TV today. Hold on, because I want to read it because it's very well said. There it is. I'm going to share this. I can share. Watch me share. Watch me share. Look at the technology.
Me. Oh, watch me.
Bingo. Manja TV saying the most important thing in life is relationships and the time to enjoy them. Take the time to build them, spend the time enjoying them. And you couldn't do better than a little pier time with a pole at a sunset. Catch it, lather that fish with some Shrimp Mojo, because it works on fish too, Matt. And enjoy your relationships. How about we get back to that? That's what I got. All right, Matt. Thank you. And we're gonna have a test on Venn diagrams. We all need to draw a Venn diagram for tomorrow's class on the 3 books and where we are here. I don't think Elon did this, but thank you for sharing it anyway, Elon. And correct me if I'm wrong. I just don't think you did it. That's all I'm saying. Thank you, Lee. Thank you, Mark. And we'll see you tomorrow on Market Vitals.
All right, Bobby. Have a great afternoon.
Absolutely.
And print some money out there today.
Right on.